Thanks for staying with us. Let's go to Indian markets and global markets over there. The problem is there in the markets. Sensex and Nifty both have opened lower. They have opened in red. Nifty was down 70 points in the morning. Sensex was down 250 points in the morning. At this moment, one share that is crashing is Infosys because of the problems going on over there. It's down by 7.5%. In Asian markets, Nikkei is down by 222 points. Straits Times was down 4 points. Talk about other global markets. Hang Seng down by 194 points. So there are problems over there in global markets too. All markets are down primarily because of Spain attacks, terror attacks that led to killing of many people. This is because of many people terrorist attacks happening. The sentiment is down, and because of which the overall we can say that markets are in red. Sensex down, Nifty down, and in Asian markets, the big markets are also down. Nikkei, Hang Seng, Kospi, all are down. And to talk more on markets, we are joined by our guest today, Mr. Lavlesh Sharma. Good morning to Mr. Sharma. First of all, how do you see the trade happening today? Today is the last day of the week. Do you have any hopes these losses will be recovered?
Hi, very good morning. I think it will be more of a muted session, though we may see some kind of a profit booking, on the downside, because we have recovered from 9,700. Now that's almost 200 odd points rally. But amid that, we also have to look at other indices which have a higher weightage, like Bank Nifty and metal stocks, which are not actually performing. And in this time, we are seeing some market rotation play with some upward bias in pharma and IT. So I think it will be more of a muted session. We may see Nifty stuck in a range of maybe 9840 on the downside, 9800 to 9940, 9950 on the upside.
All right. And about global markets, do you think any correction over there after this correction? Do you think any up move over there from these levels?
I think up move has been registered as soon as the North Korean and US geopolitical tension has eased off. But still, we will be looking at the recent developments that are happening over there, because we have seen Amazon sinking almost more than 2% as retailers are worried over that tweet of Donald Trump. So these kind of developments will be looked upon, though we have seen them eased out of downward move. Still, volatility is higher, so any rebound in volatility will actually put further pressure into the global markets.
Okay, and also, I would like to ask about this particular stock, Infosys, that is crashing at this moment because of the obvious news that has come. What should happen? What should be the position of investors for Infosys?
See, I think investors should be away from particularly kind of a stock. It is an IT bellwether. But from it, we also have to look here that this particular company has been in news for a long time. I mean, every single news that is coming in relation to the management, in relation to the earnings, there is a lot of volatility, and stock is at multi-year lows. So I still believe these kind of things will actually hurt the overall capital of the retail traders. So at this point of time, it's an avoid, and as soon as the stock breaches 900, 920 level, I still believe there is a kind of a downside in this stock that can be possible and drift towards 850, 860. Though I won't suggest to buy at current levels, because higher the volatility, we may see some kind of erosion of trading capital.
Thank you for talking to us and getting us all these details. As we speak, the markets are still under pressure. Sensex is down 250 points, while Nifty is down by around 70 points. So not a good day for markets. Markets are under red. Overall global markets, Nikkei, Hang Seng, Asian markets are also under pressure. What is playing at the mind of global investors is Spain terror attacks. The terror attacks happened in Spain, which has led to killing of more than a dozen people, and that has spooked global markets. Overall markets, global markets are not in a very positive territory, I would say. Clearly not a very good sign for markets, though. Markets are in a very bad shape.